Okay, first video for Chapter 2, Financial Accounting. We're going to take what we learned in Chapter 1 about recording transactions and we're going to convert it to using debits and credits. So that's what Chapter 2 is all about. But it starts off talking about T accounts. Now, T account is just basically a list of all the ups and downs, transactions that have happened within an account. So it has elements to it. You have the account name, that's usually at the top. You have a debit side and a credit side, and then you have whatever has happened debit and credit wise in that one single account throughout a given time frame. So for example, I give an example of cash, so this is cash, and we have debits and credits. And so this, we haven't learned rules, debits and credits yet. Some of these are increases, some of these are decreases. In total, we have a total of 32,000. I just summed this up, 32,500 debits and 26,600 in credits. What that means is that since the debits are higher, I have a debit balance, and that debit balance is the difference between the 32,500 and the 26,600. If the credit number were higher, we would have a credit balance. In cash, we normally would not have a credit balance. We generally have a debit balance. It's called a normal balance. But I just took the difference between the two, and now you can see that there is a $5,900 debit balance in the cash account. And this is just a method of showing it. So you'd have one of these for each and every account that you have. So you have one for cash, for supplies, for land, for accounts payable, all the ones that we used last chapter. You'd have one T account for each and every one, and it would just be transactions showing increases and decreases. And you would come down to a balance of some kind. So next, I'm going to move on to the chart of accounts. The chart of accounts effectively is just a list of all the different accounts that you can have. Now, it still falls into the 5 categories that we talked about in the prior chapter: assets, liabilities, stockholders' equity, and technically revenue and expenses are in stockholders' equity. But we list them out, and they are in order. They are in order of the accounting equation. If I put this sideways, like it was in the last chapter, it goes from left to right, and it's the same order as the accounting equation. It starts with assets and liabilities, stockholders' equity, revenues, and expenses. We intentionally usually have some sort of codification system where all assets start, in this case, with a 1, all liabilities start with a 2, all stockholders' equity start with a 3, revenues all start with 4s, and expenses all start with 5s. Now, this is a small account book. Most account numbers are much longer than this because most people have hundreds and hundreds of accounts, depending on the size of the organization. So realize that, it gets more in depth than this, but just for now, that's all really the chart of accounts is about. So we can move on from there. So the double entry accounting system. We learned last chapter that every entry has to have at least 2 parts to it, and the reason is because the equation must always balance. That has not changed. That is still the case, and that will always be the case. But the thing that has changed is the method that we use to do that. And we are going to use the debit and credit method called journalizing, rather than just pluses and minuses like what we did in the prior chapter. So this is a really important major part of the chapter, so I'm going to do a separate video just for double entries and rules of debits and credits. But do understand that this is an element, this double entry part and debit and credit rules, we will be using now until the end of the entire semester. So this is something you really have to have down in order to be successful in this class. So I'm going to stop this video for now, and then we will continue with the rules of debits and credits and double entry system in the next video.